Morning, everybody. How are we all doing? Happy Monday again. Another one. Morning, Marco, Evil, Vitali, Danny, Paul, FTNet, what's check, Gregors, Soul Trader. How are we all doing? So today is Monday. It is, I think it's PMI week this week, isn't it? Yeah, PMI week this week. So we got a couple of big news events. Just quickly start off with the indices at the open. I don't know what's going on with the DAX, but the DAX is having a absolute huge spike at the open. So we got massive move started to the upside. Wow, that's massive. So yeah, we've done 80 points at the open basically. In the first 5 minutes so far. We're only 2 minutes in. Should get a trade on that. Unless it goes any more crazy than it is at the moment. So pretty big move on the FTSE as well. Not massive, but it's enough to get a trade on. So we've got 15% of ADR already gone in on the first 5 minutes there. And way more there. So we'll get trades on today, but not quite sure what's caused this spike this morning. Unable to operate a mouse this morning as well, apparently. Morning, Peter. Morning, Chris. Let's just have a quick look at the news. Nothing particularly exciting there that I can see, but anyway. So starting off with the news. Morning, Marco. Over the weekend, we didn't have an awful lot happening over the weekends. Radio silence from Trump. Today he's speaking to Putin, so there could be some volatility coming in today. If there is a cease in hostilities created today for the Ukraine war, I doubt it will happen, very unlikely, but if it was, that's going to boost the markets quite a lot. Also, there's a possibility that Trump might try to negotiate some kind of deal which will remove sanctions on Russia. That could free up gold flow, which is heavily sanctioned at the moment. So there's a potential that there could be impact on the US dollar and gold as well today. But obviously, that is just a phone call they're having. I highly doubt there's anything constructive going to come out of it. But you know what Trump's like. He'll come out of it and go, yeah, we had a brilliant call. We've decided to do all of this. And then a few hours later, his blokes behind the scenes will go, no, you discussed it. You haven't agreed anything. And it'll all flip back again. So just be aware of that volatility today. I'm not quite sure what time that call is happening, but it's at some point today. Got 30 seconds until the 5 minutes are in. Let me just watch this first, and then we'll just cover the news for the week. So we are going to get 5 minute ORBs on. In fact, I'll come back to that in a minute because they're both going to be decent tradable ranges today. So today is a bank holiday in Canada. We've got Schlegel speaking later. Schlegel also spoke on Friday. So I doubt there's anything going to come out of that from the Swiss National Bank today that we don't already know, because we had discussions on Friday, obviously. There was questions asked on Friday and nothing came of it. So I don't think we're going to get anything out of that today. So today basically is a no news day. So it'll be normal market price action. It will just grind away wherever it wants to go. Morning, Baggy. Morning, Virginia. So that's really today's news. There isn't any. Tomorrow we've got the Aussie rate. So the Aussies are going to be dropping to 3.85. So potentially, assuming that happens, and if you look at history with the Australians, if we go back to sort of September 23, that has been very, very much as forecast since. We haven't actually had many changes, though. If you look at it, we've gone from 4.1 to 4.35 back to 4.1 in all of that time. So there's a couple of anomalies in here where we started to change the rates erratically without warning, but they are pretty stable. So I think we will get that to 3.85 tomorrow. If you look at the Australian dollar today, there is a potential today for some weakness in the Aussie, but we'll wait and see what happens. The Australian dollar and the New Zealand dollar are pretty renowned for doing completely whatever they want. whenever the news comes out. It doesn't matter what the news is. So sometimes you'll get interest rates increasing, for example, on the New Zealand dollar, and it will collapse, which is totally the inverse to what happens to all other currency. So what will happen to this tomorrow? Don't know. But in theory, it should be weak for the Australian dollar. It depends what they come out in the statement and say tomorrow. So the rate statement is obviously released with the rate, and then we have the press conference an hour later. So this is where obviously the press questions come in, and this is where we tend to get the real decision as to what they're doing forward guidance wise with interest rates, which is where the market then tends to take off. So somewhere between 6:30 to 7 a.m. tomorrow, that's when we'll probably see the move start on the Australian dollar. If it comes out far away from forecast, obviously, we don't get that 3.85, it'll obviously just go straight away. So we'll wait and see what happens. But in theory, it should be negative Aussie tomorrow. The market hasn't factored anything in for the last week or two, as you can see. So there's your 2-week high low there. And there's last week's high. So, we haven't really done anything in the last 2 weeks. So there's potential today for the market to start moving in the direction of what they think the rates are going to do. So we'll see what happens with that. So that's tomorrow morning. It's the Canadian CPI tomorrow afternoon. CAD CPI again. This is year on year, month on month. We know that everything's changed with the tariffs. So this data that we've got now is just about starting to take in the start of those tariffs. So I don't think there's going to be any massive shocks on it, but potentially we could see some movement on the Canadian dollar. So just be aware of that tomorrow. We've got CPI for the pound. Again, our annual figure increasing, which means interest rates staying stable. If it goes up any more than that, unlikely, but there is potential for moving interest rates up. Very unlikely it would happen, though. But what it does mean is that there shouldn't be any weakness. So we should see some strength in the pound this week. We've got the ECB Financial Stability Review, which kind of, it's just a wrap-up of information we kind of already know, so it doesn't do a lot. We got the budget in New Zealand as well. Again, there could be something coming out in that, unlikely. And then Thursday, we go into PMI. So all day is the PMIs, the Purchasing Managers Index. Purchasing Managers Index feeds into the Consumer Price Index, which feeds into interest rates. So this is the base layer, if you like, of directional bias for interest rates. So they are very important figures. Any big deviations on those on forecast, and we'll get some big movement. So obviously there's potential volatility on Thursday. Friday, we've got the retail sales for the pound and then the Canadian retail as well. So all retail on Friday. So again, CAD getting a lot of attention this week. And obviously pound as well. So we've got retail and CPI for both the CAD and the pound, but everything has got news on Thursday. So it's a volatile week. So we should see some decent movement, hopefully. That's annoying. Gutted. Okay, so range for me personally is 1200. The minimum range needed is 1209 for 15% of ADR. So I'm 9 pipettes short. So I didn't take that break. So I'll be taking a 10-minute ORB today on the FTSE. DAX is inside bar, which I'm not surprised about. So there's your 10-minute range inside bar. There you go. So short already on the FTSE. So I mean, the range size there, I mean, we did 79.50 at the open. 40% of ADR is 11. So we're doing about 30% of ADR of average daily range in just one candlestick at the open there. So I'm not surprised we got inside bar formations. So looking to take a break of that 5-minute ORB, which will probably be the 15-minute ORB today as well. And quite possibly even the 30-minute, because it's a hell of a lot of movement in it. So just quickly looking at the indices. DAX today, we've got a gap situation on the DAX, quite substantial as well. So it's quite a big gap down at the open. So typically when we get gap down situations, obviously gaps get filled. We know that. That's typically what happens whenever you get a gap, the gap gets filled. There is the odd anomaly where you do not get the gap fill. And they tend to be because there's something fundamental happened over the weekend, usually, or overnight, that causes the market to go, right, we definitely need to be doing X. And basically orders just get orphaned. accounts going to draw down, etc., etc. A gap of that size, I would typically expect to be fairly quick and easy fills, but obviously it doesn't always do that. So there's a slight gap up there on a daily basis. Look, so yeah, there's a potential, I think, for a long move this morning on the DAX. I was watching a video of a quite well-known analyst on Bloomberg over the weekend, and he was pointing out that this chart that we have on the S&P at the moment is a very typical bear market pattern. So when you get a collapse of this magnitude, which is obviously caused by the Trump tariffs, whenever you get this big start to a move, what you often get is a very deep pullback and then a normal, orderly continuation down. So he was basically saying this pattern is very, very typical, and it's what we see all the time at the start of bear markets. And the last bear market we had was obviously 12 months ago. Lasted for 12 months rather. And it was here. This was a bit of an anomalous one in the fact that it took 2 months to do the pullback. This one we've kind of taken roughly 2 months to do the pullback as well, but this was roughly 3 months, I think. But look what happened afterwards. You had the massive drop and then another massive leg down, and then it pulled back again, a similar distance to the previous leg. Yeah. That distance. If you look at what we're doing here, yeah, it's the same thing. So his analysis of it is we're going to break this low and we're going into a bear market for the next 12 months, roughly, because what's been caused by this massive shift here is an upset in all US stocks. So all US business has been disrupted by a minimum of 10% tariffs. Some of it by a lot more. Some of it has had a pause on trade in effect for 3 months. So although we're bouncing back, this bounce back is a kind of release, if you like, from the initial pressure to get businesses back to a point where they can make decisions, and the decisions aren't going to be good because there's very little they can do to suddenly flip a coin or flip a switch really, and change their business model to suddenly absorb 10% losses. So the upshot of it was we're going back here. That was COVID. That was the COVID recovery, again, caused by obviously an anomaly. But this was the bear market, which happened because of that run up. That run up was while businesses were closed. So when your business is shut, you don't make money. Why does your stock price go up? It doesn't. It's all artificial. This is actual. So he reckons this is going to potentially be one of the biggest bear markets we're going to see. All depends who you believe, doesn't it? But I've been saying for the last sort of couple of weeks, if not longer, I'm not convinced that this is not going to be a new bear market, because this has really upset world trade, and it's upset a lot of countries who used to do trade. It was on the news this morning in the UK. We do 20% trade with the US. We do 50% trade with the EU in the UK. This part here and part of this part will now go to China, because that is now the logical thing for us to do, is to diversify our risk portfolio. That's what a good business would do. That's what a good country that operates a business, in effect, will do as well. So we'll probably be dropping this a little bit because we've got other people that we can deal with. We're over in Europe at the moment talking negotiation for new EU deals. Some of this might trickle now into the EU deal as well. So what we used to do with the US isn't going to be the same. All businesses in the US are going to see a downturn. So it makes sense that this is the pullback, the first pullback in the bear leg. The second bear leg tends to be bigger, 50% usually. So his forecast was, this is opposite of what Trump said. Now's a good time to buy. He was like, now's a good time to sell. Get out. So this is a critical point we're at today, because if you look at what's happening in the S&P today, we've had this 7-day bear bull run. And this is the first bear candle we've had after making this new high. So this is an absolute decision-making point for the markets at the moment as to whether or not they have faith in US stocks. So interesting that we've got this massive move, because obviously we open in Europe before everybody else. We got this big gap down suddenly started after a bear day going in on Friday. So obviously European stocks will tend to follow US stocks, because obviously there's a lot of intra-trade done. So if businesses in the US start to fail, the European suppliers of those businesses will start also to see the knock-on effect, and we'll tend to lead it. So interesting analysis. Anyway, I thought I'd share it. But like with everything, it's one person's opinion. However, they are a very well-respected analyst, if you like. But there's a lot of analysts out there that are well-respected. That's their job. So we'll see what happens. But just be aware, this could be the start of the next bear market. And if that is the case, we want to hold on tight. So there's an argument for shifting into bear-only positions. But, we'll have to wait and see what happens over the course of the next week, really, and see whether it kicks off. Morning, Elevated, Ismet, Ace, Franco, how we doing? So inside bar on the 15-minute range. So your 3-bar range is also inside bar. Wouldn't expect anything else on a move of that size. So yeah, we'll see what happens. So play on the DAX for me this morning would be ideally a break up into the gap fill. However, once we get that gap fill in, there is a good chance it will turn tail and run. So we will see. See what happens. So come back to that in a minute. Right. So that's your news done. Positions wise, nothing's really changed since Friday. Gone into a little bit more drawdown on Aussie New Zealand, but that's not really going anywhere. So I've been flip-flopping around in the same amount of drawdown for the last week because it's just not going anywhere. So we'll see what happens with that one. Obviously, this is going to move tomorrow. We might get a bull move on the Aussie tomorrow. You just don't know with these Australian pairs what they're going to do. So Australasian. That's the gap fill upside. So my next short goes on at 150 ADR roughly today. So if we get another 150 to 200 ADR move in the next 48 hours, I'll be getting a new short on, moving the average up, and then looking for pullback on that entire leg. Swiss yen I have on at the moment as well as a long. So I've been longing and shorting this. This is my 4th trade on the Swiss yen in the last 2 weeks. All singles, straight in, straight out, straight in, straight out. Very easy. So if we are going to come down on the Swiss yen this week, some yen strength comes in. We'd be looking to test this previous weekly low or that propulsion gap. That's my next entry there. So somewhere on a down move today, I will get a new position in. But otherwise, I'm looking for a new high to be formed. And obviously push out the highs up there. I also have Euro CAD. Shorts on at the moment. Got 2 positions on that. Again, it's not going anywhere. I can't do anything with it. Stuck. Just stuck. Everything's stuck. We are just stuck on everything at the moment. It's one of those months. Hard to get money out of the market if it's not moving. Euro pound got longs on. Again, very similar. 3rd position went in on this one on Friday out of propulsion here. So that propulsion move out of that accumulation that started the long up leg. So 3rd position taken there. Average is there. Just looking for some kind of pullback on this. I mean, obviously, Euro and pound at the moment, we're in negotiations today, so there could be some news comes out today which flies this in either direction. If it goes somewhere, at least I can do something with it. Pound US dollar, also have that in shorts. Can't get, it's just the same thing, isn't it? We're just stuck. Looking for a push down into that gap, but not getting anywhere. So the only things I haven't got on at the moment are Aussie US, which I haven't found anything of interest. I've had a couple of shorts on it which have worked out. There was an argument for flipping long out of this propulsion, which I didn't take because it wasn't really extended. So somewhere up there, I'd be interested in shorting. If we do push down into these lows this week, then I will probably look maybe to try a long out of that. But obviously, we've got news tomorrow, so I'm not going to overexpose myself on the Aussie ahead of news. And Euro Swiss really sideways at the moment. I've got Swiss exposure on the Swiss yen. That's where I'll be looking to short it at the moment, somewhere up in this propulsion gap here. We are kind of just starting to grind up a little bit. Market structure shifted to the downside. We've shifted back up again. This is the retest on that W there. So moving up into there, or potentially up into the highs for shorts. Just want it to go somewhere with some vigor, basically, and it's not. So not really interested in that. So I will go through everything else today. There's no ADRs today. Obviously, there's no weekly range hits. There's no monthlies either. Nothing has moved the average monthly range at all. You know, you can see this market is flat, sideways. Nothing's done its monthly. Obviously, it won't do its weekly because the week's just started, and no ADRs. So nothing to look at from a movement perspective. RSI dashboard, the only thing you've got extended is the euro yen to the downside. So we've got one extension on the 4-hour euro yen, which looks pretty good. We've got divergence on this as well. So you've got a kind of higher low going in on RSI and a lower low going in on price action. So that is indicative of bullish price action. You've got odd price action, kind of almost the double bottom. You'd be looking for a higher low to go in there and just grinding upwards. But again, it's more sideways than anything, isn't it? So on the hourly chart, we've got this big old propulsion gap, which they're continuously buying up at the moment. We have broken above that now. So this propulsion move here is what they're buying now. So I'd be looking for targets up there. I've got a Swiss yen long on, which is very similar to euro yen, so I wouldn't take this myself. Same trade basically. So but that's it. There's nothing else to look at. It's flat. Market's dead at the moment. Right, FTSE break short is going nowhere. DAX is going nowhere. Nothing's going anywhere, is it? Morning row. Are those figures 20% and 6%? US, EU trading levels, services or manufacturing or both? I've no idea. Just general trade. Don't know. Won't be much manufacturing. We don't manufacture much in the UK. We've got steel, obviously, but we don't really make much in the UK. We're a service-based industry, service-based country. So our services PMI figures are much more important than the manufacturing, because that's the majority. We're banking. We're the banking hub of the world, basically, London. So, you know, when you're looking at PMI figures for the pound, the services PMI is going to always hold more weight because that's what we do. If you are a commodity-based country like Canada, Australia, New Zealand, your manufacturing is going to be more important, potentially. But I mean, trade is trade. It's about who you do it with more than what you do. So you've got to do something, and it's just basically where you do it. That's the important thing. It's always a knock-on effect. So when a country is trading with another country and they decide, actually, we're not going to trade with that country anymore as much, that country loses. So they have to go and try and grab business from elsewhere. So a new trade deal will be done somewhere else when that trade deal is negotiated. And then we go somewhere else over there. And because they are now manufacturing more, they might reduce their manufacturing or supply to somewhere else. And it's this constant evolving ecosystem, which is what analysts in banks and institutions, it's their job to analyze that flow, which will obviously drive currency markets. So everything in the currency markets is driven by economic data. This is a data-driven industry. That's what we do, isn't it? We just analyze data and forecast stuff, usually wrongly, which is why the market goes up and down, because no one ever gets it right, do they? Okay, DAX is looking like it wants to break short. FTSE also downward pressure at the moment. Not very convincing, though. So gap fill is roughly 15% of ADR from the high there. So there's not really a lot of room to the upside today if we do break long, but we'll see. I'm just going to whiz through all the FX pairs this morning. There's nothing else to look at really at the moment because there's no alerts on anything. So I think what I'm going to do this morning is just whiz through the FX pairs. I'm quite happy with the exposure I've got on at the moment. I'm not really looking to add any more. I'm exposed pretty much across the I am exposed across the board on everything at the moment. So it's just a case of waiting for something to move, which hopefully we'll get this week. So I'm going to whiz through and just have a look at the pairs, see if anything's getting to any decent levels really that might be good to trade from. But I'm not going to add anything new myself at the moment. I've gone through obviously the main pairs, which I'm already in. So Euro Swiss, as I said, that's not really going anywhere at the moment. We're kind of stuck mid sort of range. So more likely to move to the upside than the downside, but nothing particularly exciting. Euro Pound, I've got longs on, just looking for some kind of mean reversion on that. Euro CAD, shorts on at the moment. Again, that will move with the Canadian news, and Pound US dollar, that's rallying like crazy. So it looks like the Canadian dollar and the US are having a bad time at the open at the moment. So very weak at the open, US and CAD. Oil up to. I really wanted to take a short on oil last week, and I decided not to. Looking for a lower high to come and retest that $50 a barrel level, but I'm still not sure. Since the gap fill is only 15% of ADR, maybe makes sense to go short only today. Yeah. The market's just not going anywhere. So once the gap fill is done, I would be more interested, I think, in shorts at the moment. But go with the flow. I mean, this is the thing. With a breakout strategy, your job is to go with the breakout, not to try and second guess where they're going. Obviously, gap fills, we know when they're filled, that the inefficiency, basically the reason gap fills happen is because there's an inefficiency of order balance. So there'll be bank and institutional orders long here that need to get completed as shorts because they're in drawdown. So they'll move the stocks up to that level, complete the orders, and then sell them back off again. So quite often when you get a gap fill, it will react at the gap fill. Upside, obviously, you got Friday, which is high of the week. Anything higher than that, I think, is unlikely today, but we'll see. Sometimes, obviously, we just get a gap and go, like this one back wherever it was that I showed prior. On the other chart, wasn't it? But yeah, so go with the flow, though. If you're going to break long, what I always have in the back of my mind is whenever we get a breakout, I'm always looking for where they're going to put the brakes on. So that's usually where I'll put my partial. But the partial in this case is going to be far too close. So that's the risk on the trade. There's no point in just getting out there. It's 1-to-1. I mean, there is a point in getting out there, but I'll see how it goes. If the market is just really taking forever to get anywhere, then I might well just take the whole thing off. But it seems at the moment like it's non-directional, doesn't it? FTSE is trying to break down. Again, we got, same thing, FTSE, we gapped down. So it's not far to go to get back up there, is it? But it doesn't seem to want to go. So that's your low from Friday. If we break Friday's low, we've got the sort of New York session move here. But apart from that, all the way back down here. Long way. See, there's the gap fill. Look. So it may be that we are just going to find support and come straight back up. That gap there, I would say, is done. If you get close enough to the gap, usually call it done, basically. Going anywhere though, are we? Again, we've had a lot of sessions like this recently. Chop. Market's too scared at the moment to do anything in it. Right. So just whizzing through the rest of the FX pairs. So Aussie CAD, nothing particularly exciting level-wise coming up here. We are just stuck sideways again. Same as everything else. We're just sitting around at the moment waiting to see what happens with Trump and his tariffs next, really. The upside fill is done. So that's the origin of the move. We've gone back to that. So your propulsion targets to the downside all the way down here. We're going to need a strong Canadian dollar. Australian, we know, are dropping interest rates tomorrow, which in theory should weaken the Aussie. In a normal market, they would, but obviously this is far from normal. But yeah, so loads and loads of downside targets. I wouldn't be looking for anything but shorts on that. Obviously, you had the reversal alert and the retest up there. So if you look at the move that we had from Wednesday, Thursday last week, any kind of pullback on that sort of in this area, 3/4 of an ADR roughly today, potentially might start the next leg down if this is indeed a turning point. So looks good for shorts, but obviously you're not going to get any extensions on it because it's just not moving far enough. Nothing is at the moment. Aussie dollar Swiss, you're stuck between a rock and a hard place on this one as well. So that's the propulsion move after that break. But this is all tariff based. It's not real price action. It's basically market panic. So we are, I think, probably still grinding up to there. Weak Swiss franc. Swiss CPI came out as a 0, which means that they're probably going to drop interest rates down to 0 as well, which means weak Swiss franc, which means the Aussie can take advantage of that move by going long. However, if we weaken the Aussie because of the interest rates coming down in Australia and the Swiss are removing their interest rates as well, we are just going to go sideways. So there's just no real potential for movement on that one. It's a bear against a bear, which equals a range. Aussie dollar yen, all the yen pairs are the same at the moment. They are grindy and they are kind of weakening slightly, but not dramatically. So since the intervention move, I've got to go back out now far to find the intervention. Since the intervention move, obviously, nothing has really recovered much back to intervention levels. So as you can see, we've got a much stronger Japanese yen now on our hands. Interest rates are coming up, which is driving the yen. There's more interest in investment, especially now with the trade deals. So yeah, I think that reversal that we had back out of that propulsion breakdown there is likely going to hold. So I'd be looking for that type of movement potentially. Aussie yen, especially Aussie yen, because of the interest rates. However, shorting this is incredibly expensive. So personally, I'd much rather be longing anything against the yen because they pay you to hold it. But target to the downside, probably get a bounce out of that and then continuation down, I suspect. CAD Swiss, sideways, not doing anything at the minute. We are just pulling back into the monthly highs. So that's your monthly low. That's your 2-month low. Lovely rejection. Reversal alert's gone in there. So potentially pushing back up and then continuing back down into this propulsion gap. Again, Canadian dollar, weak, Swiss franc, weak. So these two, as you can see, when you get a weak pair against a weak pair, they just don't do anything. So just sideways and dead. This propulsion move here got retested and added to last week. Doesn't mean it's going to hold. So yeah, just hard. We're bang in the middle, obviously, of a high-low. It could go either way. Everything is really undirectional at the minute. So as you can see from my P&L, you just kind of get in and sit in stuff for ages, waiting for it to move. And then when it does move, you just take it. So it's just waiting game at the moment. You can't see solid market structure anywhere. It's just flip-floppy crap, basically. Price action is just terrible at the moment, but it will change when, we don't know. Got a bit of a gap down on the CAD Swiss as well. Look, they've just done the gap fill on Friday, Thursday, Friday last week. We got a new gap formed. So if they're going to drive this back down, I suspect we will find support at ADR today. So if we do hit ADR on that, if we can get there, be a nice little bounce out of that. Don't forget we've got no news today, so there's no catalyst to drive the market at all. Pound CAD has RSI 14 at 70 in the monthly. Does it? I don't know. Never look at monthly charts. Not interested in that long, but yeah. If it's nicely extended to the upside, take a short. CAD yen, same thing. Potentially bounce out of here. So again, market structure is bullish. This would be your higher low out of this propulsion gap. So yeah, looks good for longs out of here. And it's pushing down at the moment. But obviously this is because we've got a CAD and US weakness this morning. Whether that continues or not, we'll have to wait and see. But again, it's kind of just part of a very large holding pattern that everything is sitting in at the moment. So you are bang in the middle of the range. The worst place to take trades from is the middle of a range. Take them from the edges of the range. But equally, if you're looking at market structure movement on this, it's absolute textbook. That's your long. That's where you're going. So looks good for a market structure reversal. Reversal alert on this. We did get one on the hourly on Friday because we had a new logo in. Did we? I'm not sure if we did. There was possibly one there, but not sure whether that was actually a reversal. But that's your reversal today now because obviously it's broken down. So potentially good looking long from this propulsion gap. So we need to see if this propulsion move, which they've added into again this morning, is going to hold. So it looks at the moment like they're breaking down and it's not going to hold. So if that's the case, you're looking for a bounce off of the last week's low. You'll get some limit orders triggering there to bounce off of. So potential entry down there. Euro odd, just a sideways mess. The Euro move was weird, where we sold all the bonds and stuff. So I don't really know what to make of this at the moment with all the tariffs and everything. It's just a mess. Australian dollar weakening potentially tomorrow will drive the euro up. We've got the deal today with Starmer and whoever he's talking to. So the pound and the euro having a potential trade agreement today. So there is potential for movement on both of the euro and the pound. Could be bullish for both. Depends what comes out of the discussions today. But again, you're sideways in the middle of nowhere. I'd rather be shorting that up there at the moment because I think the euro is probably going to weaken. We're definitely going to get 2 more interest rate drops, I think, this year from the euro. So gradually just looking for sell opportunities on the euro. Euro yen, exactly the same as the Swiss yen and all the other yens. We're kind of in a bullish move. So this is where you want to buy it from right now. You're just about to get the reversal alert going. Look, potentially, you've got 20 minutes. If this ends bull, they're selling out of this propulsion gap at the moment. But if this ends bull, there's your reversal alert. So look for a retest and then push up from here. So weak yen. Yeah, looks good. It was nicely extended as well. You got a nice divergence, look, as well from Friday into today. So you got bullish divergence, reversal alert just about to happen out of propulsion in a bull market. Don't need much more confluence than that to buy it, do you? Euro New Zealand, it's really stuck sideways at the moment. So you're coming up to the weekly high today. This big propulsion move from Friday is the first retest. So quite possibly we'll get a load of sell action coming in off of that. If not, you've got a double top weekly out of that propulsion move for a second short. So it's a bit too close really for a normal long-term position trade. But if you wanted to trade intraday, take a little short there, take a little short. If you get up to those highs, you'd be averaging in there and look for a pullback on the day's move tomorrow. Nice little quick in and out type trade. But other than that, potentially coming up to there. So it's a difficult one to call, the Euro New Zealand at the minute. Again, all that's happened is it's all this deformation of the Trump move, the craziness, which is kind of just, we've reset, haven't we? So we just don't really know where to go now because we've just reset. We're not quite sure. We've got a 90-day pause. We've had the panic. We've had the panic's over for 90 days. Now what do we do? We're in negotiations everywhere. So the market's just kind of, we don't know what to do. We don't know whether you're going to be strong or you're going to be weak, because until you get those trade deals in place, we haven't got a clue how your economy is going to go. And that goes for the whole world at the moment, doesn't it? So everything just sitting around in holding patterns. So anything you sell or buy at the moment, anywhere near ranges or out of propulsion moves, you're probably not going to get anything that goes parabolic by 2 or 3 ADR at the minute, because there's just no reason to, unless some kind of deal is signed that is amazing for all parties involved. I just can't see how that's going to happen at the minute. So it's playing highs and lows at the moment, and then just sitting around waiting to see if they work. So not a lot you can do. Euro US dollars pushing up nicely. You've got a weekly high coming up on that as well. So ADR today is a good level to start looking at shorts. That propulsion leg down there, that propulsion move there, which broke the lows, held nicely. Got a propulsion gap to the downside as well. So there's targets in both directions on it. Again, no news day, so I wouldn't expect it to go very far, unless obviously something gets announced on the euro today. Just quickly look at the indices. Look at the spread on the FTSE. It's when you get the bid and the ask moving independently, you know there's no volume. It's just not moving, is it? The bid moves and then the ask moves independently. So look, there's just horrible. Can't read that. Come back to that in a minute. See if it's actually bothered to do anything. Pound odd, we're just pushing up into last week's high, so Friday's high. So we might find some limit orders at the weekly levels. We've got all these propulsion moves to the upside. Why is that not filled? It's not repainted properly, is it? Oh, this is all part of one massive. Yes, it has painted properly. It's all part of this one massive propulsion move. So we got multiple little propulsion moves, and obviously because it paints a different color, so the white is actually the propulsion gap in this case, not the blue. This is just something you don't normally see. So the indicator doesn't quite know how to handle that. So yeah, upside on this one, your propulsion gap is here, which has been retested and sold out of. And then you've got the propulsion move there, which they resold as well. So there's your structure. So they resold that order. They resold that order. So that's your kind of first resell area and second resell area if the weekly high gets broken. So first of all, it's a case of, are we going to break the highs? If not, that's where you short it from. Second and third shorts are up there somewhere. And then look for a pullback on the entire leg. But right now, obviously, you are just sitting in this huge multi-week range. We are up at the highs, so there is potential for this to pop, I think. But it's going to be tomorrow morning, probably, I think, before we get any decent movement when we know what's going on with the Australian. But they might well sell the Australian dollar off today. We'll see. It's a Canadian holiday today, isn't it? That might be why we're seeing some negative movement on the CAD and the US, because they're not there to defend themselves today. Pound CAD, there we go, straight up into the monthly. So that is last month's high being rejected at the moment at pretty much ADR as well. So again, Canadian dollar getting hammered. So watch this area potentially for some kind of price action. We've got these big old propulsion gaps to the downside, loads of them. And then we've got this one here, which they sold off, and then we retested that twice. We put in lower highs at the double top there. So this is a really good level for sellers. So good retest, gone straight in there. Look, M5 reversal alert is miles away. So 3-bar reversal, push, pause, pull, entry, stop. If it's going to work, that's got potential loads of downside on it. So in theory, from where you are here, price action wise, there is an argument for a good couple of hundred ADR, 100% of ADR drop today, this week, come back down into there. This is a very, very strong sell area, backed up by a strong sell area just behind it as well. Yeah. So this is where that move exhausted. We sold off very, very fast, and then we retested it. We sold it again. We sold it again. Then we caused negative market structure. Big sell-off came in, came back up. Lower high, higher low. This is potentially your double top. So got back up here, and then you got another monthly high. So there's an opportunity for 3 sells within kind of about 125 ADR there. So it's quite an aggressive little trade if you put 3 on there. But if it holds in this area, as it has before, it'll be a nice profitable trade. Pound Swiss. Not going to get a trade on the DAX today, I don't think. FTSE's out the lows. So this is what's currently holding up. So we need to break through this area. If we can break this here, we're going to flush today. But it's holding at the minute. Right, Pound Swiss. So yeah, Pound Swiss just moving back up into propulsion at the moment. But obviously, I think there's an argument for getting all the way up here. Swiss franc, I can't see any strength coming through in the Swissy unless something goes wrong, and obviously then they will buy the Swiss. But other than that, don't see any other reason why that shouldn't be going long at the moment. So you're stuck in this range here. I mean, there's been no signals for longs on this, apart from just about back there on the hourly. On the 4 hourly, you've had nothing in the last sort of 3 or 4 weeks. Obviously, that move is Trump. So I think we're probably going to try and recover back up into the previous balance. So I think 225 ADR move to the upside just to retest that monthly level at least is probably on the cards. And then from there, who knows? We'll judge it back when we get there, if we get there. But right now, it's just sideways. So lovely big bull move going through propulsion today. You're just about to break Friday's high. There's your retest of the move from Friday. So we have also got this downside propulsion gap to fill as well, though. So it might want to come back down here, which would be a 50% retracement on that leg before the next up leg. But it's sideways again. Order of the day at the moment, sideways. Pound yen, same as all the other yens. Don't see any reason why we shouldn't continue strength against the yen. Not dramatic strength, just some strength. We came out of the monthly highs, double monthly high last Monday. So yeah, it's pulling back. But yeah, don't see any reason why we shouldn't continue to the upside unless something bad goes on with the deal today. Pound New Zealand, again, propulsion move held on Friday. We're just trying to retest that now. So we're in the retest zone. This is flying in. The pound really on the move today. I'm assuming this is all market confidence in the deal being done with Europe today, the UK and Europe. So we'll see what happens. But yeah, either that's going to hold and double top, or we are going to fly through there. Don't forget the Australian and the New Zealand move together. So if they are going to start selling off on the Australian interest rate drop tomorrow, the New Zealand will go with it as well. So again, that's potentially why that's pushing up. I'm struggling to see us getting there very quick, but you can see how long it's taking to get anywhere at the moment. Yeah. Could easily be down here by the end of this week and up there next 3 or 4 weeks, couldn't we? So it's just not going anywhere either. But I would be looking for shorts if we get some serious price action out of those highs, but not something I'm trading at the moment. Swaps are very expensive on pound New Zealand. New Zealand dollar CAD sideways. totally sideways. Literally every propulsion gap filled, as you can see. So those highs, I'd be interested in shorts. This is not a bad. You couldn't get into it on Friday really because it was in the Asian session, but that retest this morning, good. Looking for a push up into propulsion today. But again, you are part of a sideways move. Yeah, and you are bang in the middle of the range. Not the best place in the world to take a trade from. New Zealand dollar Swiss, same thing, sideways, totally sideways for 3 weeks. Can't do anything with that. So range highs and range lows. So sell the highs, buy the lows, and keep doing that until it proves you wrong. That's all you can do with that type of move. New Zealand yen, again, this one is a little bit deeper pullback than the others. So I think, again, lovely place to buy from down here. Assuming that we are just going to continue to grind against the yen. So again, it's not going to be particularly fast, but somewhere in the next 3 or 4 days, potentially we're pushing back up into there. However, if that does weaken the Australian dollar tomorrow morning by dropping that interest rate to 3.85, we will see a weak New Zealand dollar coming in as well. So that could start a breakdown. If it starts a breakdown below those lows, you've just put in a new lower low. So could well just drop from there. And obviously, you know where it's coming, down into there. So New Zealand dollar, US dollar, again, very, very sideways. We're starting to roll over. So US dollar strength starting to come back in gradually because obviously the pause in the tariffs. But again, as you can see, market zero confidence in the dollar at the minute. It's going to take some serious negotiating for Trump to get that dollar moving again, and especially all the way down to there. So we'll see. We don't know what's going to be happening. But for me, that is the undoing the V-shaped recovery on the tariff move. And this is what we are kind of holding at the moment. So I would be more interested in probably buying at ADR and looking for that. But again, Aussie tomorrow could weaken the New Zealand dollar. So again, these very, very tricky to call these at the minute. FTSE's not going anywhere. So they are rebuying that level on the FTSE. So that area just highlighted and rebought. So this is the propulsion move here. This is the previous accumulation before the move. That's what they're rebuying at the minute. We will see. So there's an outside bar at the moment going in. Outside bar and inside bar equals indecision. So the next candle after this outside bar will give you an idea where we're going. 45 seconds left on that. We'll come back to that in a bit. New Zealand dollar, US dollar done. US dollar CAD. So again, US dollar CAD very, very sideways. We have had the big move up, which is on the tariff announcement again. So, or rather the pause of the tariffs. So, you see what the market's doing at the minute. US dollar and CAD move together, both oil, both commodity, both stuck. So a bull against a bull or a bear against a bear equals a range. That's exactly what we've got at the moment. There's no interest in buying that. There's no interest in buying that. So we're just going sideways. You get the odd piece of news which moves the market erratically, and then we just sit around. So again, selling the highs and buying the lows of last week, this week is probably not a bad idea at the minute. We've got a lot of news though with PMI numbers coming out. We've got a lot of CAD news this week with CPI coming out as well. So there's probably going to be quite a lot of movement, more movement CAD based than US based potentially. But again, Trump. Yeah, he could say anything and he could upset it and drive it anywhere he wants. So depends whether his cronies are long or short as to whether or not we go up or down. But at the minute, the propulsion move at the end of Friday seems to be being resold today. So look for a kind of reaction out of there. If not, we're looking for a reaction basically somewhere down here if last week's low doesn't hold up. So there's potential, I think, for a good move down here today. Not today, that'd be nice, but this week. But, there's equally an argument for just doing that as well. So it's all news driven. We'll have to wait and see. But there's nothing, right here, you are bang in the middle of last week's high low. So could go anywhere. You've got more propulsion gaps to the downside. If ever you're thinking of biases as to where you're going to go, always use propulsion moves. So we know this is where the sellers are sitting. Yeah, so the sellers that sold that low are there. The sellers that sold that low are there. The sellers that started the move are there. Yeah, so we've also got targets to the downside where the buyers are sitting. So we broke that high there. So we know there's buyers there. We know there's sellers there. You are bang in the middle of where they're going. So there's 3 downside targets and there's 3 or 4 upside targets. 50-50 in it. Could go either way. No reason for them to drive it specifically in one direction or the other at the moment. US dollar Swiss looks more like that. Swiss franc weakness. No reason why the Swiss franc should be strong at the moment, unless Trump says something and everyone goes panic again and they put all their money in the Swiss, in which case, obviously, you're going to be down here. But at the moment, the Swiss franc should be weak. So this is a great spot for buying right now. You've got 3 weekly levels in the same area here. So you've got this high here, which is a weekly high. You've got a high there, which is a weekly high, and you've got a low there, which is a weekly low. So this is a previous area of support resistance, and it's still holding. You're exactly there at the moment. So this is absolutely spot on, a great place to buy today. And it looks like it's either flagging or holding this level. So get reversal alert. There's a good chance that that will push back up, and you're looking at coming back up and retesting that previous high. 125 ADR to the upside is the interim high from last week. So lovely little level that. And you've got to complete a gap fill pretty much. So that's a lovely looking buy. Look, US dollar Swiss. I'm tempted on that, but I'm not going to take it. I'm sticking to my rules. You do get paid for longing US dollar Swiss as well. So it's a nice carry trade if it doesn't work out. If it does drop and you've got to scale into it, at least you're getting paid to hold it. US dollar yen. Again, same thing with all the other yen pairs. I don't see any reason why we shouldn't be grinding our way back on this. However, you know, that's a 50% retracement. Lovely. Grinding our way back up. But this is the dollar, obviously. So if you look at the intervention, we almost got back there on the US dollar yen. It was the one that really almost did the full fill. We have just put in a double bottom in the last sort of month on this. So we are kind of just grinding our way back up. The danger you've got here is obviously this kind of move potentially coming in. So some kind of weakness in the dollar. There's no reason why the yen should suddenly power up from nowhere at all. So at the moment, and obviously if something's said, that will change. But at the minute, there's no reason why the yen should suddenly become really strong. So it makes sense to buy it. From here, this is a pullback 50% on that leg. We've got this propulsion gap to the downside today as well on the 4 hour. So we've got this level here, which is a little bit lower than where we are at the moment. Another half an ADR, roughly a quarter of an ADR, something like that, down to the downside. Great spot to sell, to buy it, and then try and push out above those highs. Hourly. So it's that flag break there, which they rebought again and again and again and currently. So if it fails, that's your next stop. And then you got a double bottom on last week at 175 ADR. But even the 175 ADR pullback is only a 68 retracement. Oh, no, it's not, sorry. Your 175 pullback. Yeah, it's kind of on that leg already. So that, yeah, that'd be a double bottom, wouldn't it? That's that. I mean, that's a lovely pullback at the moment. But you're looking, either way, you're looking to put in a higher low. So this propulsion gap here, possibly hold. That's your 71.9 retracement. One of them. Everything works in fibs. There we go. There's all the pairs. So, yeah, very sideways everything at the minute. It's a tricky old market at the moment. Okay, so outside bar has painted an inside bar. So we got indecision followed by indecision. And now we've just decided we're going short. So continuation short. So target on this, assuming we break that interim low, I would say we're looking at there to the downside. So somewhere in the region of 86.15 to the downside is probably a good target. So my partial close is pretty much spot on today. If it goes, obviously, we still haven't broken that low yet. So we've got to break this first. But bulls really not in control today. Balls to the balls. I'm intrigued by the zone trader EA. I can't see you using it anymore. There's a reason for it. No, it's just another way of trading. I can't trade everything, Marco. If I traded everything that I have built, I wouldn't have any time in the day to do anything else. Everything does the same thing. So if you want to use the zone trader EA, use the zone trader EA. I use the position trader EA. This is the opening breakout EA. It's a totally different strategy, obviously. But yeah, I just use the position trader EA. But everything I've just said on my analysis there is something you can use the zone trader EA for. So haven't even got it on this terminal. Naughty, isn't it? Haven't got my own product on this terminal. But yeah, if you want to use the zone trader EA, it's the same thing. All the zone trader EA does is it gets you in at support resistance. So where I've been saying that's a good spot to buy, stick a zone on it. If it gets down to there, it will take a trade. There's a million ways to get into the market. All does the same thing, doesn't it? Are you up for suggestions on the zone trader if I send you an email? Yeah, I don't know. You can send me an email. If it's anything to do with can it do this, can it do that? No, because it does what it does. The zone trader EA is a tool for traders that want to place a box on the chart, and when the price gets there and some bullish price action happens, for it to take a trade. There's not much else I can do to it. The more I can make it more complex, but then it just makes it more unreliable, doesn't it? If you have to have a specific set of conditions met within a specific area, you're adding infinite complexity into something that moves at random, which just gives you random results. So if you think that price is coming down to here and you draw a zone there, and the rule is when it gets there, you have to have this extended, you have to have this exact price action happening, or this, that, the other has to happen. You're adding layer on layer on layer of complexity to something which is really simple. This is where you think price is going to bounce from. If it bounces from it, trade it. It doesn't have to have a 3-bar reversal, or it doesn't have to cross a moving average. It doesn't have to have a reversal alert, or it doesn't have to have a bullish engulfing and the bearish, the bottom of the bullish engulfing has to be inside the box. The other thing has to be outside. Relevant. It's either going to bounce there or it's not. If it bounces there, it's going to bounce there. Let it bounce. Just get in. If it's going to go down to here, draw the next box down there and wait for it to get there and bounce out of that. I don't really want to overcomplicate it, but I'm happy to, if you've got any ideas to other things you'd like it to do, send them over. But the idea of it is it's simple. You draw a zone and you take a trade out of it. There's a lot of extra confirmations you've got in there already on the zone trader. So the price action patterns. Why is my website so slow today? Perfect, spot on. So, there's 3 price action signals in there. Wick inside, close outside, open inside, close outside, open inside, close inside. Those are the 3 price action patterns that suit 99.9% of trading strategies. It's a rejection. What we're looking for is a rejection at the zone. That's it. I don't want it to be, you have to have a particular pattern happening. If it If it pushes into the zone and comes back out of the zone, it's a rejection. If it wicks into the zone and comes back out of the zone, it's a rejection. If it's inside the zone, you get a whack, a great bullish engulfing, it's a rejection. But it's one candlestick, isn't it? So personally, I don't like that. I actually much prefer to use those two. But it's my manual trading strategy, really. I don't want to add complexity to it, as it is mostly a manual EA. Yeah. But yeah, no, but if you've got other stuff you'd like it to do, send it over and I'll have a look at it. There's not many people using it, really. I mean, you remember, aren't you? Yeah. So, I mean, you know why I built it. I built it in the members stream to be a training tool. That's the primary purpose of that is to teach support resistance and to convince you that support and resistance works by you drawing support and resistance and going, wow, look how much it bounces off of it. It's literally what it's for. But it's exactly how I used to trade. That is my old manual trading strategy, was before I built the position trader EA, was to set alerts at levels and trade levels. And then I thought, well, pretty much every time it gets to a level, it gets extended on the RSI. So I'll flip over to the RSI. All random, isn't it? At the end of the day. It's all about applying risk to price. But I'm happy to look at suggestions on everything. Also, the thing that obviously I take into account is complexity. So, you know, if it's very complex to code or there's complex logic, I have to weigh up can I be bothered, or have I got time, I should say, to figure it out. Because if, you know, I'm happy to change products, but if one person asks me for one feature and 99 other people are happy with it without it, I can't just do the work for one person. You know, it's got to be something I think, yeah, that's a good idea. And there's lots of good ideas that I haven't done on lots of stuff. So I think my suggestion will solve a major problem to most of us. What is it? Tell me. Send me an email and I'll have a look. Or DM in Discord, whichever. We are just trying to break these lows again. So we'll see if we can get down there. We just put a lower low in on the FTSE, but immediately pop back up again. There's absolutely no strength here. I'm chasing the losses from Friday as well at the moment. So if I can get back half the losses this morning, hopefully we'll get a decent US session. Can't wait to hear that, Themba. Anything that solves a major problem is always a plus. I'm always up for solving major problems. I'm just not quite sure what the major problems are that I haven't solved so far. I've told everybody what to do. Press the button, wait. If it goes down, buy it again. If it goes up, sell it. That's trading. It's going down at the moment. I've sold it. I'll keep holding it while it's going down. When it goes back up again, I'll get out. Problem solved. Yeah, so this is doing nothing, is it? We're dead. We're dead today. It's just sitting around. So I've got loads of stuff that I'm working on at the moment, but I'm back this afternoon at 2:30. We will trade the US session and see how we get on there. I was just looking at my P&L thinking I might just take that $500, but I've now got 348, and out of principle, I don't want to take that. So I'm going to wait. I'm going to wait it out and see if it goes. If we are back almost break even on this, there's the propulsion gap at the moment. So that's really the line in the sand today for the FTSE. If it's going to break short and it's going to pull back, that's where it's going to go from. The DAX is literally doing nothing. So we are rebuying the initial propulsion move of the morning. So this to me looks bullish, which worries me, because if the DAX is looking like it's starting to go bullish, the FTSE is probably not going to go down. So we're kind of stuck between a rock and a hard place at the moment. But as I say, it's absolutely undirectional. As you can see, we're bang in the middle of the ORB at the moment. It's not going anywhere. So I'm just going to let these play out this morning and see where they go. So I think obviously upside DAX gap fill is a logical play, but with this momentum, I suspect we'll be coming back in the live room this afternoon, and I'll be going, the DAX is on its way to the gap fill, and we'll be probably somewhere around here. Just not getting anywhere, is it? So no news day. So what happens on no news days? There's no news, therefore we don't move. No reason, is there? Morning, Robert. Why does the Australian and New Zealand move together? Yeah, it's basically just because they're trade partners. So they're both commodity pairs. So the main three commodity pairs are the CAD, the Aussie, and the New Zealand. So the main exports are commodities. So the Aussie and the New Zealand are pretty much trade partners. They are the same thing, if you like. So Aussie, New Zealand are affected much more by each other's economy and each other's economic decisions. So if the Australians suddenly ramp up their interest rates, that will drive up lending, which will slow the economy. New Zealand does most of its trade with Australia, therefore its economy also gets slowed. Therefore, the currencies tend to move in sync a lot. So if you look at the correlation between the two, if you look at something like the Aussie US, and you sort of draw price action on what the Aussie US has been doing, and then you look at the New Zealand US, it's the same thing, slightly different degrees of movement, but the price action is the same. So they're the same thing, So there's no point in trading both of them. You trade one or you trade the other. However, obviously, if there is a massive differential suddenly comes in, so for example, if New Zealand freeze their interest rates and Australia increase their interest rates, that will give the Australian dollar a competitive advantage. And that tends to be a parabolic squeeze. So you tend to get times where there's a sudden, fast, sharp movement like this, where they go out of sync, but they will always return to sync. So it's just a massive rangy thing, the Aussie New Zealand. But the Aussie is normally the one that wins out. But again, this is why I say with the Aussie and the New Zealand, when you see the interest rates and the CPI numbers coming out, we've had it in here so many times in the past where the New Zealand interest rate has dropped and it's flown for days on end. And you're like, why is a negative news event positively affecting it? And it's because there's the whole continent to take into account. They're both traded in the Asian session. They do a lot of deals with China. So they're just the same. They're just affected in the same way. So if you look at the Euro odd and then look at the New Zealand odd, the Euro odd and the Euro New Zealand, same chart. But it's just because they're economically tied. So it's the same as the euro and the pound. So if you look at the euro pound FX pair, at the moment it's a little bit different because euro got massively affected and had to suddenly up its defense budgets and sell a load of bonds. But normally on this, you spend most of the time range bound because these two pairs do the same thing. Then you get a differential in interest rates, but they very rarely last. So any moves you get, 9 times out of 10, you will get them undone. Mostly. That's an anomaly because of Trump, but it is obviously undoing it, but obviously that's taking a lot longer. But yeah, close trade partners, US dollar CAD, sideways the vast majority of the time. Because the US and the CAD, until 6-8 weeks ago, were like that. Tight trade partners. Not anymore. Yeah, Canada are doing a lot of deals over the top of US to Mexico, and they're doing a lot more deals and negotiating with China and Europe, whereas they didn't have to in the past. Now they are because they've had their arm cut off by the US. So where we're seeing correlation at the moment and normal trading action, that is going to change. So it might be that the Aussie and the New Zealand get separated. It's unlikely those two would get separated, but stuff's changing all the time. There's all the sorts of things, like there's a lot of exports of meat products from New Zealand, obviously. Now the US is exporting a lot of meat products over into the UK. It may well buy less of that from New Zealand, which means the New Zealand will weaken, but it won't affect the Australian dollar because they don't do as much of that export of sheep and stuff. So, it's just, they're the same thing, basically. That's all. If you got a little bit of super glue, you could basically stick New Zealand back onto Australia, couldn't you? That's the way to look at it. I don't think they'd be very happy about it, but they can. You'd need some serious super glue as well. Gorilla glue is not going to cut it. It's going to have to be industrial strength super glue to hold the countries together, obviously. Mother Nature might have something to say about it. Anyway, we're stuck. So I'm going to leave it there today. We can't really go much further with this. It's just sitting around. So I'm hoping this will just drop, but I've got a feeling it's going to pop. So I'm going to leave it running, as I said. I keep coming back to it because I'm really split as to whether I want to hold it. And then the DAX does something like that to give me confidence that we might get a drop. Indecision. If in doubt, leave it. Can't be bothered. Right, I'm not going to argue with it. It's just going to do what it's going to do. So I'll be back this afternoon at 2:30, usual time. We will look at the US session. We'll trade the NASDAQ, S&P, and the Dow this afternoon, see how we get on with those. There's not any news today to worry about, so business as usual. See if anything gets anywhere. I did see an ADR just pop up, didn't I? Yeah, EuroCAD. So we have got a little bit of movement on the EuroCAD there to the upside. So that's your first ADR of the day. Obviously, Canadian dollar very weak. We've got a good strong euro on the back of what's going on with, I guess, with the UK. So ADR is a double top of Thursday's high. We've got a double propulsion gap, which we sold out of here. So this is a good selling area up here. That is obviously a previous high from weeks. That's not a weekly high, is it? Yes, it is. 2-week high. There's your 2-week high. So you've got your weekly high where you are now at ADR. You've got your 2-week high at 125 ADR, and you've got propulsion sellers in here. So this whole area here, good for some kind of pullback. So my next entry on this, because I'm already too short, is going to be way above that today. I'll be up at one. We need to break out a last 2-week high, basically, for me to get another trade on this. But yeah, range high. In the range. All right. I'll be back this afternoon, 2:30, US session. Other than that, if you need anything, send me a message in Discord or Telegram, or I'll be back later. Have a good day.